Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, I'm Rahma Najwa Fauziah, people call me Rahma, and here I will explain about the general ledger. So keep watching this video. The general ledger is a book that contains a collection of estimated accounts related to the recording of financial transactions, which summarizes the subsidiary ledger, which contains all the list of changes in the financial statements of an entity or company. The general ledger is the basis for making balance sheets and income statements. The definition of a ledger according to Gito Brahmana is the final recording stage in accounting which accommodates a summary of grouped data sourced from journals. The general ledger is usually owned by the company. The types of ledgers that are owned also vary. It depends on the number of transactions carried out by a company when viewed from the type, volume, and information the company wants. The term recording in the general ledger can be called a posting that is made when we have finished recording in the general journal. There are two classes of accounts in the general ledger, namely real accounts, namely the accounts that appear in the recording of the balance sheets, assets, debts, liabilities, and capital. Nominal accounts, namely the accounts contained in the income statement and include income and expense account. Ledger function, a tool for summarizing transaction data that has been recorded in the general journal. As a tool in classifying financial data and to find out the actual number or state of the account or accounts, whether there is a difference or not. As a basis for classifying transactions in previous journals or general journals. As a complete material in the preparation of financial statements. Ledger benefits. Balance various financial reports, has a major track record of financial statements, can provide clues to odd or unusual transaction activities, can help show data manipulation or fraud in recording, can be used to find out the financial health condition of a company or business. And this is the picture of general journal and the form of general ledger. Date, account title, and explanations, ref, amount, debit, credit. And this is account, number account, date, description, post ref, debit, credit, and balance. And this is the type of T-ledger. The T-ledger is the simplest and most commonly used form of ledger. This type of ledger is used for transactions analysis purposes as well as to explain the mechanism for using accounts. In the T-ledger, the debit side is on the left and the credit side is on the right. Then in the last column, there is a column for total debits and credits and debit balances. And next, the controlling ledger. The two columns are debit and credit columns. The debit section column consists of four columns containing the date, description, ref number, and debit nominal of the transaction. Likewise with the credit section, which both contain four columns. The difference lies in the credit nominal of the transaction. Staple ledger is the most detailed form of ledger. Therefore, this form is widely used by companies, especially if the company requires a detailed explanation of a transaction. There are two types of staff ledgers, namely those consist consisting of 3 columns and 4 columns. The 3-column ledger has a single balance sheet. On the other hand, a 4-column ledger has a duplicate balance sheet.